apart from earnings and policies, one big cue for the markets, for broader markets, is how rates are going to go. And we really thought we were at the end of that rate hike, madness in the US. Because inflation was sort of getting manageable. You're talking about a time the last hike could have been the last hike, but now US Fed's governor, Ms. Bowman, has clearly come out and said, expect not one, but multiple rate hikes going forward. And that's not good news, isn't it?
So, Krishna, I thought I understood macroeconomics and inflation and rate cycles fairly well. I'm left a little confused right now.
Okay.
In the US, you're dealing with high inflation. Core inflation, when you strip off volatile items like oil and food, core inflation is likely to stick around 4.7%, well above the threshold of the Fed at 2%. So a rate hike seems fairly obvious. Look at what is happening in China. Continued inflation and rate cuts to spur up investments, to spur up the loan cycle, to get the animal spirits of Chinese corporations back to take money from banks and invest back in creating jobs, etc. Look at Latin America. Brazil and Mexico are both cutting rates. India has been on a 3-month hiatus on any movement of rates. It's what the RBI refers to, Shaktikanta Das refers to as the hawkish pause. Now the problem actually emerges specifically now from reports which are coming in, and I'm specifically referring to the Deutsche Bank report of the Deutsche Bank Indian economist. And they're saying that food inflation in the month of July, and if you look at the 3 broad commodities in the food inflation basket of tomatoes, onions and potatoes, have gone up 87% month on month between the month of June and July. And that is likely to take headline inflation, not core inflation, which keeps the food prices aside, headline inflation for the month of July to perhaps as high as 6.7%. Now that report comes a day before the monetary policy meeting commences. So the point really is the RBI going to look at that one aberration in the month of July and sort of, use that as a benchmark to hike rates once again?
Right.
Or are we going to just let it sit through, breathe it out and hope that, it was one aberration, not likely to repeat? Because whatever, inference or whatever tinkering that happens by way of rates, it sort of results in inflation numbers only a month later.
Yep.
So I think RBI right now will
at least a month. It takes at least a month.
Right. Yeah. So RBI has a very difficult job cut out right now.
Right.
Where number one, US is likely to increase rates, and the FOMC has also been split on should it be 0.25%, should it be 0.5%. Some FOMC members also saying maybe a rate cut rather than a rate hike to spur up investments. Right. So if Fed is most likely to increase rates. If Fed increases rates, the US bond market is likely to see inflows. That is going to have FDI outflows or FII outflows from India, net sellers.
Yes.
And if net sellers begin to happen, then what is more critical for the RBI? Inflation in election year, or making sure that investments keep coming to India?
Oh, tough balancing act.
Gaurang is going to have to come to
toughest
our
balancing
rescue.
act. We'll break the story down, Kartik. There is rate hikes expected from the US Fed, the US Central Bank. And then, of course, India is reconsidering rates in a monetary policy review simultaneously. Let's begin with the US Fed.
So India needs to tame inflation, hence rate hike seems logical.
Right.
But India wants to retain cash in India when US bond attracts money, and hence a pause or a rate cut might be in order. So, so it doesn't seem like a very obvious choice.
Right, not an obvious choice at all. Gaurang, we'll come to you with the first question. What are your thoughts on what you're hearing from US Fed Governor Michelle Bowman? Michelle Bowman making it clear that there will be multiple rate hikes. That's the commentary. Although the FOMC, the Federal Open Markets Committee, is supposedly split. Lots of commentary coming in from the US Fed. How do you think the Indian markets are interpreting the messages coming in from the US Fed?
So firstly, I think with the kind of multi-decade high inflation in US, undoubtedly they'll have to do out of the box thinking to possibly, bring down those high inflation levels at a very reasonable level, point number. And for that, I think you'll have to think out of the box, and that's what has been done. You may have to take certain hard, crucial decisions which you have not taken for last many years and decades, purely because of the kind of situation you are in. And the market, as far as our markets are concerned, and the globally, we were aware since the beginning of this year that in the US there is going to be issues with respect to inflation, and because of that, you might see rate hikes coming through. How soon and to what extent, that will totally depend upon what the numbers tell us as far as US inflation is concerned. Having said that, I think large part of this news is already there in the factored into the market. Possibly knee-jerk reaction could be felt over here, like we saw last week with the decision that came through. But over here, I think from today up until 10th, that is day after, you will see the MPC meet. And on 10th, possibly you will see Governor Das coming out and telling us what the decision is. According to us, it's going to be a pause because 1 month uptick with respect to certain food stroke, vegetable stroke, agri commodity related inflation may not possibly compel the MPC to decide on any rate hike. I think they'll possibly want to wait for some more time and see and possibly act accordingly. But on 10th, according to us, there's going to be a pause as far as RBI is concerned. Commentary is what we would be possibly eagerly wanting to listen into. But as far as US is concerned, I think they need to do a little bit more in terms of out of box thinking and to bring down the levels of inflation at a comfort zone wherein the world may not fear that.
Okay. So we can only hope that the better sense prevails in the US.